Welcome back to Opening Bell, getting you ready for the trading day. Joining me right now, Russell Hackmann, president of Hackmann Wealth Partners and author of Wall Street is Not Your Friend. It's great to see you. Thank you so much. You know, I was listening to Jay Woods this morning, a friend of our network, and he was talking about the highs versus the lows. And
right.
When he was saying it, you know, you can note the great highs that we've been seeing, right? You see the stocks, the Philly Semiconductor Index, NVIDIA, NASDAQ. But he said it was 9% new lows in the S&P 500. And you haven't had a reading like that when the markets are making all-time highs. So he was concerned. How do you feel about the tech rally?
Well, I mean, there are just you know, we talk about sometimes, you know, sometimes the wind's at your back, sometimes the wind's in your face, and sometimes you don't know where the wind is coming from. And it kind of feels like one of those times in the sense that, you know, obviously we have AI, technology, chip demand, everything driving the markets higher. On the other hand, you have concerning things around inflation in particular, bond yields creeping back up, and the Iran war still hanging out there. So there really are a lot of countervailing forces, and you got people like Michael Burry calling the top. It's hard to say where we go from here.
Understood. I mean, at this point now, we think about inflation, and I was noting how Ben Emmons was looking around the globe and how Japan was coming in. He was looking at Europe now, and so everybody's getting some spikes.
Right.
We had CPI and PPI this week, and of course, gasoline is part of it, but it's not just that. It was rent, it was protein like beef and chicken and things like that. Your thoughts on inflation? You know, how quickly can that come back down if the Strait of Hormuz is, you know, then now repaired and running normally?
I mean, our view even before the Iran war was started was really that inflation was sticking around 3%, right? It wasn't headed back towards 2% as the Fed kind of wanted. And I think I personally think that the notion that, you know, even if the Iran war was resolved tomorrow, and oil prices went from around 100 back to 80 or 70 or wherever they might go, that you know, as you were talking about, Nicole, the price of oil affects so many things and is feeding through the economy. I mean, I think we got a couple years, honestly, where we may see inflation, CPI, 4%-ish.
Wow. I mean, what do you think about what happened in China? The president's meeting in China, bringing all those CEOs, you know, and we've gotten news, right? They're going to buy oil. You know, China's going to invest in our agriculture. They're buying some Boeing planes. You know, it was supposed to smooth over trade worries and things like that. What were your takeaways from the Trump-Xi meeting?
I personally, you know, from a market perspective, it seems like it's just not too exciting. You know, I don't mean to sort of poo-poo the event, but, you know, less Boeing planes than we thought. Not a whole lot happened around NVIDIA. There wasn't some $100 billion announcement of soybean purchases or something, which, you know, U.S. farmers would have loved to see. So, you know, it seems to me like it was more pageantry than substance, especially as it pertains to our markets. I don't think it makes a whole lot of difference.
Right. Kevin Hanks actually did say that it did seem like it was less than planes than I anticipated, but they could buy up to 900 planes, which would be more than anticipated. And we should also note that Lynn Martin here at the New York Stock Exchange, also in China at the summit. So it's nice to have the representation of our home here.
Absolutely.
There. So I think that's a big deal too. I wanted to note that. You know, what are your thoughts about the rate environment? You have the 2-year at 4, the 10-year at 4.5, the 30-year at 5. Your thoughts?
I mean, I think it's quite concerning. I think obviously inflation and bond yields feed upon each other. You know, could the 10-year be headed back towards 5%? I mean, that'd be pretty concerning. You know, if you look back at the last time we had sort of crazy tech rallies, it was 2021, right? And what followed was a massive inflation spike in 2022, and you know, the S&P down 20% for 2022, right? And bonds really taking a hit in 2022. I'm not suggesting inflation's going back to 9%, but I think there is concern that inflation stays high, bond yields are up. The Fed maybe has to hike rates. I think they're pricing that in a little bit. And, you know, that's not helpful for equity valuations, just as a standalone basis.
In your notes, you have sort of the scary stuff. You talk
Right.
about Michael Burry of the Big Short. Tell me more about that.
Well, Burry's, you know, and I subscribe to his newsletter. You know, he is sort of, he even said, hey, I'm the boy who cried wolf. Like, he's called the market tops, you know, more often than there have been market tops.
Right.
But he's also had some tremendous calls in 2000 and 2008, really called the tech bubble in 2000 and 2008 housing crisis as memorialized in the Big Short. So, you know, he's saying, hey, look at, you know, I read his piece. He's saying, look at the charts from 2008, look at the charts from 2000, even look at the charts from 1929, and we're seeing these, you know, spikes like this. You know, you've got price action, like in the chip sector, you know, is up 75% for the year, but most of that in 6 weeks.
So what do you take away from that other than the obvious? You know that the market has a spike and we're up 70% here or whatever. Do you get worried? Do you think there is a big, you know, that it's time for a big short? Are you worried that we're going to have a real pullback, 5%, 10%, 15%? I mean, why do you bring it up?
I don't want to be wishy-washy. Obviously, it's hard to make a big call.
Sure.
But what it tells me is, and you have things like the Buffett index that are at all-time highs. You know, the ratio of stock market capitalization to GDP.
Yeah.
You know, rising interest rates, rising inflation. You know, and valuations way up. The S&P up 75% plus over the last 3 years. To us, you know, we work with a lot of retirees, people close to retirement. It says, you know, take some steps to protect your gains, you know, and that's not a bad, you know, take some chips off the table. I think it's not a bad call. You know, you've been on a winning streak.
You're a winner even if you made a little, right? I mean, that's sort of the bulls make money, bears make money, and pigs get slaughtered. I mean,
right.
you know the old
exactly.
story of Wall Street. Yeah, Russell, it's good to see you.
Very
Thank
nice
you
to
so
see you,
much.
Nicole.
Russell
Thank
Hackmann,
you.
President, Hackmann Wealth Advisors. Thank you for being here today.